Hello everyone, welcome to the market opening bell on Monday, March 24. Last Friday was the US stock market's triple witching day, with over 4.7 trillion US dollar in options expiring. The market was highly volatile that day, with the Dow Jones Industrial Average at one point plummeting over 500 points. However, US President Donald Trump said there will be flexibility on reciprocal tariffs to be implemented on April 2, which calmed market sentiment. The Dow closed up 32 points at 41,985, gaining 487 points for the week, a 1.2% increase. The S&P 500 rose 5 points or 0.08% to 5,667. The Nasdaq climbed 92 points or 0.5% to 17,784. Both indexes saw weekly gains of approximately 0.5% and 0.2% respectively, ending a 4-week losing streak. The Nasdaq Golden Dragon China Index, which tracks Chinese concept stocks, closed at 7,892, down 139 points, with a weekly loss of 186 points. Despite the broader market's rise, two stocks flashed warning signs about tariffs and the economy. Nike forecasted a double-digit sales drop this quarter due to tariffs and declining consumer confidence, coupled with lower gross margins from accelerated inventory clearing, causing its stock to fall over 5%. FedEx cut its stock profit forecast, dropping more than 6%. Tesla rebounded 5% in a single day, but fell 0.5% for the week, marking its first ever 9-week losing streak. Elon Musk noted that the company's stock has halved this year and urged employees not to sell, saying it's hard to imagine a future with 10 million autonomous taxis on the road, each 5 to 10 times better than current vehicles. Additionally, he believes the company can adapt its autonomous tech for robotics, targeting production of 5,000 Optimus robots this year. Tomorrow, Apple will hold a developer event in Shanghai titled Exploring Apple Intelligence and Machine Learning in Depth. It's understood that this event has not only drawn significant attention from developers, but also sparked industry speculation about the imminent launch of China's specific Apple Intelligence features. Apple previously revealed that Apple Intelligence will support new languages, including Chinese, starting in April this year. As US stocks fall to current levels, they have begun attracting capital inflows. Investment bank data shows that in the week ending March 19, US equity funds saw a massive 43.4 billion US dollar in inflows, with 34.1 billion US dollars directed to US stocks, the largest single week inflow in 2025 so far. This week's upcoming data releases include the final US Q4 GDP figures, the final March University of Michigan Consumer Sentiment Index, the February Core PCE Price Index, durable goods orders, new home sales, and the preliminary S&P Global Manufacturing PMI. Hong Kong stocks fell sharply last Friday. The Hang Seng Index opened 111 points lower, briefly rose 11 points to a high of 24,231, but then saw losses widen, hitting a low of 23,578 in the afternoon, down as much as 642 points. It closed at 23,690, down 530 points or 2.2%, with turnover rising to 339 billion Hong Kong dollars. The H-share index fell 208 points or 2.3% to 8,742, while the Hang Seng Tech Index dropped 196 points or 3.4% to 5,640. For the week, the Hang Seng Index fell 270 points or 1.1%. The H-share index dropped 135 points or 1.5%, and the tech index declined 241 points or 4.1%. Mainland Chinese markets also saw significant declines last Friday. The Shanghai Composite closed at 3,364, down 44 points or 1.3%, with a weekly drop of 1.6%. The Shenzhen Components Index closed at 10,687, down 192 points or 1.8%, with a weekly decline of 2.65%. Total turnover in Shanghai and Shenzhen reached 1.5507 trillion yuan, up 109.2 billion yuan from the previous day. Companies announcing earnings today include BYD, BYD Electronic, Sunny Optical, China Taiping, Zoomlion, Conch Cement, Kingboard Holdings, and Kingboard Laminates. BYD fell 7.7% to 391.6 Hong Kong dollars last Friday. Reports suggest the EU is investigating whether China has subsidized BYD's Hungary factory. If confirmed, the EU might force BYD to divest assets, cut production capacity, repay subsidies, and potentially pay fines for violations. Our stock pick today is Stella Holdings, stock code 1836. Stella Holdings is primarily engaged in the sale and manufacture of footwear and handbags, as well as the sale of self-developed branded products. The group launched a 3-year plan in 2023, focusing on growth and profit margin expansion. After 2 years of implementation, it has achieved significant results. In 2024, for the second consecutive year, the group exceeded the 2 key targets set in the plan, achieving a 10% operating profit margin and a year-on-year after-tax profit growth rate in the low teens percentage range. At the same time, the return on invested capital, ROIC, reached 21.6%, a substantial improvement from approximately 10% in 2019 before the long-term strategy was implemented. The group's 3-year plan emphasizes business growth and profit margin improvement, focusing on 4 key areas. 1. Strengthening product category mix. This includes deepening partnerships with major global sports brands, collaborating with luxury and high-end fashion brands seeking to expand into sports and athleisure footwear lines, and adding more mature, fast-growing boutique sports and fashion footwear brands that are leading the athleisure trend to its client portfolio. 2. Expanding and diversifying production to stabilize costs. This involves increasing capacity at its new shoe factory in Solo, Indonesia, announcing a cooperative project with a major brand partner to jointly establish a dedicated sports shoe factory in Indonesia, and expanding production capacity in Bangladesh. 3. Optimizing management effectiveness and efficiency. This includes restructuring the organization, centralizing the customer management team to provide better service, refocusing its factory operational teams on day-to-day manufacturing excellence, enhancing design and commercialization capabilities, and linking management incentive programs to transparent short and long-term operational goals. 4. Enhancing cost efficiency and improving working capital. This involves strengthening the client portfolio to reduce overall risk, improving inventory and cash flow management, and further tightening cost controls across departments. In 2024, the group's shipment volume increased by 8.2% to 53 million pairs, while consolidated revenue grew by 3.5% to $1.545 billion. The revenue growth rate lagged behind shipment growth rate due to a higher proportion of lower-priced sports products and a decline in raw material prices. Gross profit rose by 4.7% to $384 million, with the gross margin improving by 0.3 percentage points year-on-year to 24.9%, driven by an improved product category mix and higher production efficiency. Operating profit increased by 15.7% to $184 million, with the operating profit margin rising by 1.2 percentage points to 11.9%. Net profit reached $170 million, up 21.2%. The group's net cash position stood at $417.6 million, a 45.3% increase from $287.4 million as of December 31st, 2023. The board proposed a final dividend of 0.5 Hong Kong dollars per share and an additional special dividend of 0.56 Hong Kong dollars per share from the excess cash return program. The total dividend for 2024 amounts to 1.71 Hong Kong dollars per share. Recommendation suggested buy price at 18.6 Hong Kong dollars, target price at $20, stop loss at $17.8. I do not hold the above mentioned stock.